Good morning, good afternoon, good evening, ladies and gentlemen, wherever the world you are. We've got a fantastic panel for the next hour around the future of institutional blockchain. To lead the panel, we have a great analyst from the fintech field, Ms. Annette Brolis. Annette, the floor is yours.
Thank you so much, Lawrence, and welcome to you all once again. I'm sure that over this conference and this blockchain track of Fintech Connect, we will be covering many of the aspects around cryptocurrencies and blockchain that's so important at the moment. This session particularly is on institutional, the future of institutional blockchain. And to discuss that, I have a great panel with me, and in a short while, I'll let them introduce themselves. We will be discussing both the investors, the securities, the tokens, the different assets and the standards and regulations. So I'm very much looking forward to this. And for you in the audience, please take this opportunity to be part of it and to share your questions and your comments. We will try to fit them in as we go along, or we'll take some other questions by the end of the session. And as we have a whole hour in front of us, it should be a great time. So without further ado, let's perhaps get this panel started. I'll ask the panelists to introduce themselves, and I'll ask you also to say how you understand the meaning of institutional blockchain, which come up when you Google it in some different fields. So John, could I ask you to start?
Thanks, Annette. Hi, everyone. My name is John Ho. I'm currently the head of legal for financial markets for Standard Chartered Bank. On your question about institutional ecosystem, I think our vision of this space is one where you have a trusted global integrated institutional platform or infrastructure where it does provide for institutional liquidity and an ecosystem that allows for the issuance, trading, and settlement, transfer, and custody of a host of various types of digital assets, not just on the public sort of network, but also in relating to private markets. And I think where the spectrum we are seeing right now is there's a lot of institutional interest in regulated digital assets as well as crypto assets, underpinned by client demand, a better understanding where this ecosystem works, and also new sort of developments, for example, in the sort of decentralized finance, which is obviously a rapidly growing area. And I would say that much is still yet to be explored, but I think for institutional ourselves, we much want to start off with what's clear in terms of regulations, what's regulated, and what that makes sense for us in the provision of financial services, like, for example, FX, liquidity provider, custody, and very much in the space of providing services in a sort of regulated and network based on what I've just described.
So definitely a very broad perspective on this field. Graham, do you agree? Would you like to introduce yourself?
Yeah, sure. Yeah. So I'm Graham Moore. I'm the head of tokenization at Polymath. Polymath is a blockchain tech company that makes it easy to create, manage, and issue digital securities or security tokens. So in addition to that, I'm also on the advisory board of a company called Red Swan. Red Swan has tokenized the most commercial real estate in the entire world at this point, so $2.5 billion worth. And then I also am the author of the first ever ABC book about Bitcoin called B is for Bitcoin. And so in terms of the institutional blockchain, how would I define that? I would describe that as any institution using a blockchain for any purpose. So not necessarily what's the infrastructure underlying that, because there are institutions today that are using Bitcoin. They're custodying Bitcoin for clients. They're helping clients trade Bitcoin. There's institutions that are finally adopting Ethereum. And then there's institutions that are using more kind of purpose-built infrastructure like Polymesh, for example, which is the blockchain that our company built for security tokens. So really any aspect where an institution is using a blockchain instead of a retail user, that's kind of how I'd categorize institutional blockchain.
Great. Thank you. So definitely many types of institutions as well. Alberto, would you like to introduce yourself and add your perspective?
Absolutely. Thank you, Annette. Thanks for having me here in this panel. I'm Alberto Cozer. I'm responsible for business process automation in North America for Nestlé. And I have been working on our on track for a few years now, our own track and our own version and interpretation of how we can drive value to the business through blockchain. I agree with what's been said about what is the purpose and what is institutional blockchain. What I would add to what it's been said so far is that for me, institutional blockchain is about defining clear and concise business value out of blockchain based on the different possibilities of blockchain. As it's just been mentioned, it could be someone operating crypto, it could be someone taking value out of other functionalities of blockchain. It could be around tokenization. But the important part for institutions is what is the value that this is driving to the business? Is this something that it's improving on a similar value that they have on the non-blockchain technologies that they're exploring or systems that they have today? And probably that's the most interesting quest that we have on blockchain today, which is answer the big question that people used to joke about many years ago. Was that blockchain is a solution looking for a problem, waiting for a problem to solve. And you know, as the technology matured and many use cases have been tested, many have failed. I think that that is no longer a question, and how you use that to drive value to your business. It's probably what makes sense when you talk about institutional blockchain.
Right. And lastly, Keith.
Hi, good morning or afternoon, everybody, and thanks for the opportunity to speak. So Keith Bear, I worked for IBM for many years, ending up leading financial markets, and the last few years of that, a lot of work in blockchain, specifically in financial markets. Now I'm a fellow at the Center for Alternative Finance at the University of Cambridge. You may be familiar with our Bitcoin electricity consumption index. My focus is, our focus collectively there is on the climate impact of crypto assets. The DeFi world, how can we better map that to increase transparency, and alternative monetary systems such as stablecoins and CBDC, central bank digital currency, for which I sit on the Bank of England's CBDC Technology Forum. Obviously, so much has been said on institutional blockchain, there isn't very much more to say, but I would just add one comment, which is in my time at IBM, one of the projects I was working on was, which is now has been in production since 2018, is CLS-NET, so CLS, Continuous Link Settlement. It's the main global settlement mechanism for foreign exchange in the institutional market. That has been in production since 2018, as I said, using blockchain for netting for those currencies which CLS itself doesn't support settlement for. So I've been able to increase liquidity and reduce cost. It went live initially in 2018 with Morgan Stanley, Goldman Sachs, and Bank of China. So my only point is that there's a significant benefit in blockchain technologies, independent of what we've been talking about in terms of tokenization, et cetera, and the crypto assets as an asset class, et cetera. Just the pure technology itself has value in terms of being able to streamline and make more efficient traditional financial markets infrastructure, besides inventing new infrastructures, which is obviously what we're seeing at the moment.
So perhaps starting backwards with you, Keith, as I think that many of the questions we're going to touch upon today will be relevant for most of you. Where do you think we are as a status? Because for me, when I listen to you, it just sounds like very much of sort of, I wouldn't say an emergent market, but still we have good cases and we have good ideas and great visions. And like you say, Alberto, in the end, it all comes down to realizing a business value from using this different type of infrastructure and these different types of tools. So where do you think we are with institutional blockchain at the moment?
I think a very exciting place in many respects. So in many respects, I think we're at a cusp. for various reasons. I mean, clearly the crypto asset world has been exploding. A lot of that driven in earlier times by retail interest, retail speculation, and obviously over the last year, 2 years maybe, institutional investment has come in at a much greater extent, and that in large part has been facilitated by new regulated entities that are able to provide the kind of services, the market infrastructure that's required, and new financial products, be they Bitcoin ETFs, for example, as initially launched using futures, the futures market by ProShares, for example. Only a couple of days ago, Invesco launched for Europe their ETP for Bitcoin. So there is a lot of new opportunities in a regulated environment to be able to, for institutions to have exposure to the crypto world. And also the market infrastructure is maturing at a high rate. I mean, only I think a week or two ago, SDX, the Swiss digital exchange, went live. This is a subsidiary of the main Swiss exchange 6. Very interesting structure, having a bond that was issued in partnership with a number of local banks, including UBS and the Cantonal Bank, if I remember. So very interesting model where there's a traditional bond issuance alongside a tokenized bond issuance, the two being kind of interchangeable, and token obviously going through the SDX market infrastructure. And obviously we're seeing many other exchanges that are now launching digital exchanges, such as TDX, the Thai digital exchange. JPX recently launched their new subsidiary focusing on that area. NASDAQ likewise has been demonstrating their technology to facilitate this as well. So the market infrastructure is maturing. The custodians are obviously very active. So Boni, Fidelity, and others very active in the digital asset space. And we're beginning to see the early stages, I think, of what that really means as we're getting, well, I'm sure we'll be talking about DeFi later, but how these two worlds of DeFi and the new maturing interest in institutional activity within the blockchain world is really going to come together.
So this was the first take on where we are with this at the moment. I'm sure you others have comments as well. Graham, how do you think, seen from the infrastructure provision perspective?
Yeah, I think we're still very, very early. So at Polymath, we sort of spearheaded the term STO back in September 2017, or actually maybe even before that, kind of in the summer of September 2017. And so back then, it was kind of us trying to build some technology on top of Ethereum, enabling these things called security tokens. So you could actually have a regulated asset on a public blockchain. So you could have things like transfer restrictions, ensuring that only certain parties could hold tokens, ensuring that KYC and AML policies are followed for these securities that live on top of blockchain. And really only four years ahead of that right now. And so amount of tokenized assets are kind of anyone's guess between a couple $1 billion and maybe 10, maybe $20 billion. So in the grand scheme of the real world assets that exist, it's still a very, very small drop in the bucket. So we're nowhere where we're headed in terms of the life cycle of this thing. So we're still a few years away from seeing $100 billion, then $1 trillion, then multi-trillion dollars that live on blockchains in terms of assets. So it's still very early. One thing that I think is pretty exciting to see is now there's finally some purpose-built infrastructure. So instead of just kind of Bitcoin, which does a simple thing like have a token, or Ethereum, which is kind of general purpose infrastructure, trying to be all things to all people. We now have some purpose-built infrastructure. So part of that is companies like Polymath building Polymesh, which is a specific infrastructure for one use case and one use case only, which is financial assets. And then we have other companies doing similar things. Providence would be one of those, building infrastructure for things like HELOCs, home equity lines of credit. And so that's starting to push the industry forward. And I think that was a big sticking point for a number of large institutions was, are we allowed to use this thing called blockchain? Are we allowed to use this infrastructure for actual regulated financial assets without running afoul of any regulations? And so we're finally starting to see banks kind of cross that chasm. And so it's been a long time coming, but we're finally starting to see them say, okay, yeah, let's dip our toes in. As was just mentioned by Keith, SDX is launched. There's a bond on there. SocGen has issued a bond on Ethereum. And they're now making proposals on things like MakerDAO, which is actually really, really cool to see them interacting with DeFi infrastructure. And so, we're starting to see the first cracks in the dam where banks are saying, okay, this technology is safe to use. We are not being harassed by any regulators when we use it at this point anymore. And so it's finally starting to happen, but still a very long way away from what the technology actually can be and the amount of assets and the amount of exciting initiatives that can be built on this stuff.
So, Alberto, starting to happen and creating value, starting to create value as well.
It is the value is noticeable, both on as Graham just mentioned, both on the purpose built infrastructure that started flourishing to address gaps on the general purpose existing infrastructure, but also there's a feedback of, like, after this experience, some of what couldn't be found on the general purpose infrastructure is being built back on that infrastructure, leveraging the experience of some of the purpose-built blockchains that we have out there. And the one important aspect, and for me, probably one of the most interesting values that we have been getting out of this, is what I like to call software-defined markets, software-defined assets, software-defined value. And I don't want to get much into the regulatory discussions around this. I still have, and I share an opinion that what initiated the original spark of blockchain is around being unable to be regulated to some degree. I understand why governments and why some institutions have a concern with operating in an environment where regulation could prove difficult in the future. But at the same time, we need to realize that this is as new for us as probably the internet was 30 years ago, and it was hard to grasp and understand the implications of everything. I'm still a firm believer that the market and the rules of the system, being generic infrastructure, purpose-built infrastructure, will regulate itself because it's a community of collaboration where all the players can only win and extract value if they agree on a set of rules that works for everybody. And we've been seeing that for the most part. Of course, Bitcoin is a very big example of that. But so is the Ethereum experience that goes far beyond what Bitcoin achieves today. And there's many of the learnings from that the people behind the Bitcoin community is going back and trying to feed back into the infrastructure.
John, did they leave any comment for you on this question of where we are today, how we are moving?
Yeah, hi Annette, thanks everyone. On the institutional adoption, right? I think a lot have been said about the increased adoption, but just want to highlight a couple of key recent reports. That institutional adoption on blockchain technology has gone from a couple of years ago, proof of concept, people are doing trials, experimentation. Where we are right now in many parts of, let's say, financial institution and also large corporates, they are looking at how do we harness the efficiency that blockchain technology could offer. For example, trust in the sort of data, and also looking at a single source of truth, and also to reduce paper-based processes, especially in the trade finance lifecycle, supply chain, and also in financial services, especially in the back office where the settlement and postage settlement. So there's a lot of initiative out there. And if you look at the flows, as what Keith mentioned earlier, we have seen significant capital flows from large institutions over the past 18 months through exchange traded products, exchange traded funds, or trusts If you look at the market cap of a lot of digital assets, including crypto, it's already exceeding $2.5 trillion, 250 billion locked in DeFi protocols. And for institutions looking at the blockchain technology investment, that number runs into billions of dollars right now. So the efforts we see in terms of where that is heading, three main sectors that obviously in the context we see is financial services, energy and natural resources, supply chain, food and agriculture. These sectors are enjoying huge adoption, growth in this supply chain model. And I think the other thing that's important right off the back of COP26 is how do we use technology to drive the transition to low carbon economy, because you cannot do that without technology alone. And I think one of the technology they're looking at very closely is a blockchain technology. And I think a recent study have shown that 2/3 of the enterprise blockchain startups are also trying to address United Nations Sustainable Development Goals. And increasingly people are being aware that when you create blockchain technology, you need to align with the United Nations Sustainable Development Goals, your green strategy. And I think people are getting more sensitive towards sort of what sort of technology are you doing, whether what's the carbon footprint, and how do you reduce your carbon footprint such that it aligns with the green agenda. So I think there's a lot being said. Now, the other thing that is also driving, at least on the financial services side, we see is the modernization of financial infrastructure. What do I mean by that? Parts of our sort of ecosystem, like for example, we're used to securities issuance, like STOs have been mentioned. We now have jurisdictions such as Germany and France and several major jurisdictions that have passed legislation to recognize the legal enforceability of a security done in a digital format. So that's being recognized on several fronts, and now we see an explosion of digital tokens that are used to be traditional sort of securities done on a global certificates. And the other thing is platforming, right? So increasingly exchanges like AXX, Hong Kong Exchange, there's been mentioned earlier, SDX, even in the US, CME, CBOT, they're also looking at how do we harness the technology to offer, or rather to replace some of the legacy system with respect to settlement cycle, making sure that we can achieve DVP, delivery versus payment, or real time. There's a project also recently led by DTCC, Project Ion, Project Whitney, and now there's a next stage where they want to, DTCC wants to digitize the private markets, because private market is ripe for digitization. Then you can unlock value in this. So there's a lot to be said. And the other thing that's important, last but not least, but equally important, is the concept of payment, right? We see payment as just normal way of remittance. But the way that payment now can offer with smart contracts, with blockchain technology, and also digital identity is you can program money. So the programmability offers a lot of solutions and attractions to people where it offers a new area of sort of tools or investable classes that currently doesn't exist, right? So look at the DeFi world right now. There's a lot of financial services that are being offered, that are being replicating the traditional world. Having said that, we've seen the emergence of new financial market infrastructure that currently exists natively, but doesn't exist in the real world. So that shows you how fast innovation is. Now, obviously, that doesn't mean that it doesn't come with any risk. Like anything else, what is possible in the technology world needs to be sort of aligned with regulations, ensuring that where activities are part of regulated activities, regulators wants to make sure that you adopt the sort of mantra, same activity, same risk, same regulations.
So you definitely point to some important areas of value, including driving business and including a better infrastructure and including new types of assets that can be available in different ways. So lots of value in development here. There's also a question coming from the audience that fits nicely with what I was going to ask you next. Do we have the regulation and perhaps the standards that we need to unfold this in a fast way, and are the authorities receptive to the ideas of blockchain? And we will come back a little later also to the whole question of decentralized finance in this respect. So do we have the regulation and the standards that we need? I don't know who would like to start here.
I can
Keith? Yeah,
have a
sure.
first go. I'm sure others have a view as well. I mean, I think it is slowly moving forward. I was struck by MiCA or MiCA, depending how you wish to pronounce it, so the market infrastructure for crypto assets in Europe, for example, which is a very broad set of regulations that are going through the approval process at the moment and will apply to the whole of the EU 27, etc., when they do come into force. And over the 160 pages, I think, of that documentation, I think there's only one reference to non-fungible tokens, for example. And maybe this isn't a fair example, but it gives you an idea of the challenge that exists from a regulator's point of view to actually not only formulate this regulation, but also to get it through, a complex governmental system such as the EU. Whilst the whole innovation is running at light speed within the crypto asset, DeFi world, etc. So I think there is a major challenge, and that lag is quite a big factor in all of this. But having said that, MiCA is putting in place a regulated landscape which potentially will attract quite a lot of crypto asset activity into Europe for those firms that want to play by the rules, have a legal entity, for example, and license with the authorities and according to what kind of activities they're performing. So that's all positive. But on the other side, there's been comments, for example, here in the UK, crypto derivatives are banned by the local regulator, and there's a debate about whether that is appropriate or fair. But obviously the regulators are very concerned about consumer understanding, transparency, education, etc., for consumers that are looking to gain exposure, especially with the amount of speculative activity that's going on at the moment. But on the other side of the coin, we've touched on the Bitcoin, for example, ETFs and ETPs, etc. So there are regulated and approved mechanisms to gain exposure. So whilst that may be attractive to the institutional side, there are opportunities to participate from the retail point of view, without necessarily getting into dark waters in terms of what's regulated or not.
Yeah, I'll add to what Keith said there, where it depends, right? So it depends on what regulator you're talking about. And so in the EU, at least from what we've seen with kind of the regulated asset space, they've been far and ahead, much better than almost every other jurisdiction that we've seen at this point. And so how things are moving in the US is today pretty much still, sure, yeah, go ahead and build that. Maybe we'll sue you later. That's kind of been the SEC's approach. And so it's really hard to get anything meaningful done, especially when you're talking to the Goldmans, the JP Morgans of the world, when those large institutions who care a lot about their reputation and ensuring that they're on the right side of regulatory lines, them hearing, yeah, sure, go for it, but maybe you'll get sued, is not an area where they can play ball. So that's been sort of disheartening to see from the US. And then also in terms of the SEC not approving a spot-based ETF for Bitcoin has been very, very strange at this point. I think one firm is suing them. I think I saw on Twitter yesterday. So, that'll happen. And then eventually they'll approve one and say, okay, yeah, we'll approve this ETF thing. But yeah, in terms of what we've seen in terms of regulators, the EU has been really great. And I think that's where we're going to see the majority of innovation take place, as we have seen, as I mentioned, with things like SocGen participating in governance proposals with MakerDAO. We have not seen a bank of that scale do anything even remotely close at this point with a public blockchain like that. And so I think the EU is kind of winning the race at this point.
Just to add to the mixed discussion, I think there are two things we need to bear in mind. One is the technology that underpins some of these sort of digital assets or crypto assets. What I mean by that is the distributed ledger technology or the blockchain technology, because these two things are not the same thing, right? Some people are sort of trying to link the two. Obviously, a lot of the digital assets rely on cryptographic technology, and also distributed ledger technology or blockchain. But the technology itself, you look at, let's say in Europe, the European Commission just very few days ago have approved a pilot regime where, sandboxes they call it, or pilot regime in Europe, they call it, and could be trial for financial markets sort of initiative. So now they recognize that, look, this technology is here to stay, right? They want to look at pilots projects to enable innovation in this area, especially in financial markets. So that's a plus, right? If you look at UK through the FCA have sandboxes where you have regulatory sandboxes, digital sandboxes that sort of promote innovation for sort of fintech firms or even financial institution within a safe space to trial and experiment some of the innovative solutions within a certain limited period of time. In the US, they're obviously looking into this area as well, trying to see whether similar approach like TechSprint, Innovate Lab to sort of provide the sort of nursery or hubs to nurture some of these technologies. So if you look a couple of days ago, the BIS has set up the New York Innovation Center as well, precisely because they realized that there's a lot that could be had in terms of looking at working together with regulators and the private sector to create innovation in this area. So I would say that technology in itself, I think if it's in the right technology within the right sort of ecosystem, most regulators would encourage that within means, obviously. But if you look at the types of digital assets, not all digital assets are treated the same. For example, on a high level, you have cryptocurrencies, as mentioned earlier. With respect to retail, quite a number of jurisdictions obviously wants to protect retail investors. Therefore, there are restrictions or prohibition on advertising, marketing. But if you look at the institutional play, KVAD, MTOR, investor protection is less of concern. And then there are other types of tokens out there, stable coins. You got central bank digital currency right now that is in focus. And then you have security tokens that increasingly, a representation of a security in a digital format. And I think the other latest innovation we see is how do you capture carbon offset and carbon credit allowances? So there is emergent digital tokens out there that represent carbon credits and carbon token. So obviously these are new. It calls into question, how is it treated? Is it property? Is it intangibles? Is it an asset that's capable of being securitized? These are novel issues that obviously, policymakers, and also firms that are involved in it are very much focused in terms of how do we sort of build this ecosystem and how do we sustain this ecosystem within the realms of legal and regulatory framework.
Great, John. I'll come back to you, Alberto, because I think you probably had a comment as well. But I think, John, you just unknowingly answered a question from the audience, which was to give some examples of the use of the blockchain, institutional blockchain in finance. And I think you already mentioned both payments and CBDCs and security tokens and a number of areas. So I think we can add examples as we go on, because this is a good question. I mean, if we don't understand from a lay perspective what the use of all this potential is, then surely it'll take some time to get started using it. Alberto, would you like to comment also on the regulation and standards before we move on?
Absolutely. I think I'm a little bit of the dissenting voice here when it comes to regulations. And I hear what Graham mentioned about the SEC saying you do what you want to do and we'll meet you later. And also understand how that makes the traditional players very uncomfortable with the market in general. But my comment on that, besides everything that's been said, is that we're talking about innovation at a scale that's never seen before. And trying to set rules and boundaries on innovation, it's a disservice to innovation in general. And history has had multiple opportunities to show examples of how that could kill innovation or delay innovation by many years, if not a decade, if not decades. Also, when we think about innovation and blockchain, certainly it's one of the greatest innovations we've had in, I'll say at least in the last 15 years. it's about failure. It's about try and error and seeing what works and what doesn't work. And when we're trying to find your failures faster, innovation actually regulation doesn't play well with that. Now, about how receptive regulators are and prepared to accept blockchain, I would say they are not super receptive in general. That's why we have some, they're jumping to try to put some harnesses on that, as it's been happening in Europe, and some others that are just, watching and saying, keep playing and we'll see how this goes later, which is, equally concerning. But it's a change, and it's change of a proportion that makes everybody uncomfortable and people afraid of it. Especially for the ones that have already set the rules of the market, and this is something to be taken into account. As you see, like at least on the general purpose blockchains, every time there's a discussion about technological changes for that, as it happened on the discussion that created the fork on Bitcoin, for example. The forces, they're trying to keep this harder to regulate. For example, on the block size of Bitcoin, that's one of the drivers behind this. It's winning in general, and the idea that you want to keep a small block to make it even more difficult for it to be regulated, even at a network level, to say government will come and will cut telecom. And the idea is that you want to have an infrastructure that is able to run on top of LoRa devices or a LoRa-based network, for example. This is fantastic to see that this is in the minds of the folks who are actually helping develop those platforms.
So when we look into this, I think it's been interesting to hear you bring up the questions of consumer understanding, because obviously in the end, consumers will need to use some part of this, and they should understand something. I mean, I don't get the first thing about what happens in my car, but I drive it anyway. So this is also a question of coming on to the full extension of such a platform for people to trust in what they don't understand. But I was thinking, we've talked about regulation and regulators, and there's also a question about developing standards and the standards interacting. How does this relate to the question of decentralized finance instead of centralized finance? You mentioned it a couple of times, and would one of you like to start that discussion?
Yeah, I'll start there. And I think we have no idea how this is going to play out with things like DeFi. And so what I mean by that is we haven't seen too many regulatory crackdowns on things like DeFi, Aave, for example, Bancor, a lot of these decentralized protocols where some of them are now pooling billions of dollars together, which is big enough for a regulator to go after. But I actually appreciate that we haven't seen anything too big for anything like that. However, we did see back in the day, I can't remember if this was maybe early 2018, the SEC go after Ether Delta, which was kind of the initial DEX, so the initial decentralized exchange where kind of anyone could trade anything with anybody, and people were trading tokens around, and the SEC figured out who put up the front end for that decentralized interface, and they just went after the front end guy and said, hey, you need to pay a fine and you need to shut down Ether Delta, and he said, okay, sure. But now we have infrastructure that you actually can't take down. So as I mentioned, there's things like Bancor, Aave, Uniswap, SushiSwap. A lot of these things are either based outside of the US in terms of where their front interfaces live, but then the contracts themselves live on a blockchain, and you can't pull those down without pulling down the entire decentralized infrastructure, which is effectively impossible at this point, unless you had every single government in the whole entire world shut the electricity off or shut the internet off at the same time. So it's going to be really interesting to see what happens with a lot of this DeFi technology, where potentially there's going to be some regulations that are broken. Of course, I mean, there's already regulations that are being broken that we see, but people are using these things to the tune of billions of dollars a day, and regulators typically don't want to end the party before the party ends itself. So we saw in particular with things like ICOs. At one point, the regulator didn't really step in early 2017. They waited for all the things to go down 99%. People got upset, and then the regulators are on the good side with the people who lost their money. And then they come in and say, okay, let's clean the space up. And so I'm not sure when a lot of these enforcement actions are going to happen against DeFi protocols, but they will happen. But the really interesting part is, can any of these things actually be taken down? And I don't think they can, because you can just constantly move. And so it'll be this sort of whack-a-mole game where regulators crush one front-end user interface, and then the user interface moves to another jurisdiction. And it will effectively, in my opinion, a lot of these things will become like Pirate Bay. Pirate Bay gets shut down every day, and yet people can still download whatever movie they want at any point in time. And so people will still be able to use these DeFi protocols anytime they want, but will it have this sort of mass adoption of big institutions? And I think that's the question that remains to be seen. We see some institutions, Coinbase is talking about plugging into these decentralized lending protocols, and a few other of the kind of crypto native, the Galaxies of the world, the Coinbases of the world, the Geminis, talking about plugging into these DeFi infrastructures for their backend to pool liquidity. And so that might actually be how this thing shapes out, is we have these completely decentralized, uncensorable protocols at sort of the base layer, with these regulated front end faces on top, where they are the ones interfacing with regulators, and they're just using these tools to provide things like liquidity. And so I think that's going to be really exciting to see, and really looking forward to kind of how that shapes out.
So basically, I'll let you comment, Keith, because you brought up the DeFi as well. But I was just thinking this. So basically, with regard to, so this is about regulation, but it's also a question of standards. So we will see the battle over standards developing, like we've seen it in other fields as well, and somebody winning probably in the end.
Yeah, but just to add to what Graham was saying, I mean, on standards, by the way, there's obviously industry organizations like Global Digital Finance. They have a DeFi working group, for example, with GBBC, Global Business Blockchain Council, etc. So there are standards coming out from these industry associations, but obviously not very much from a regulatory point of view. The point I was going to make is that, whilst DeFi is in theory decentralized, there are still many elements and many protocols which actually still have a degree of centralization. And for example, in terms of the distribution of tokens, governance tokens within the DeFi protocol, and access, privileged access to be able to change the contracts and so on. And this was, I think, picked up by FATF, the Financial Action Task Force, that published in the last couple of months their view in terms of this subject. And they're making the point that whilst the protocol itself may be decentralized, individuals within it may have a disproportionately large amount of the responsibility in terms of how the protocol operates, and therefore may be construed to be a crypto asset or virtual asset service provider, and therefore the individuals may be come under the auspices of the regulatory treatment. So whilst the technology and the smart contract code, etc., may not be something that's easily regulated, the individuals who are primary in terms of creating and facilitating and running, they potentially have some sort of exposure. So that, I think, is the direction of travel, that whilst the technology may be safe, the individuals may still find themselves under some regulatory scrutiny from that point of view, which I think is, again, fascinating. The other comment, we talked about MiCA a little earlier in Europe. MiCA, as I said, has a very broad coverage in terms of crypto assets, and does mandate the need for a legal entity in order to transact within Europe. So obviously from a DeFi point of view, there may not be a legal entity. So that would imply, therefore, that those protocols would then be breaking the EU regulation at that point. And again, what that means in practice, I think we'll have to find out when MiCA comes into force.
So I think that time is flying a little here. So I think we should move into a bit of shorter comments. Graham, did you have a... I
was just going to say for 1 second on Keith's point, where everybody's really excited about DAOs right now, distributed autonomous organizations. I think what DAOs are going to realize, they're individuals, and they can be sued for their entire net worth if they do something wrong. And so they're actually going to realize that they need a corporate structure. And so a lot of these DeFi protocols too that have decided to become DAOs with governance tokens, once the kind of CEO or lead developer gets sued for their entire net worth, they're going to realize, oh, wow, we should have just made a corporation. So I think that that's something that's going to happen. I don't know exactly how a DAO will kind of plug into the corporate structure, but they're going to realize at some point that corporate structures are there and they've been useful for hundreds of years for a reason.
So I can see that from the audience, we have continuous questions about specific examples and examples of where institutions would be using this kind of blockchain technology. So I think it's useful to take a round where you present a few good examples, not too long ones though. But I was thinking about coming to Keith first and asking you, is this a good point to introduce the question of blockchain and pushing the ESG agenda? And some of the work perhaps that the UN is doing as well.
Sure. I mean, obviously, we talked a lot already about the institutional interest in crypto assets as an asset class. But obviously, the other big trend going on at the moment is ESG, and in particular, the kind of environmental elements as it applies to crypto assets, most notably Bitcoin, because as we all know, the very large amount of electricity that is consumed in terms of Bitcoin mining. So you may be familiar with cbeci.org, I think, Cambridge Bitcoin Electricity Consumption Index, which basically is I think, largely a global standard now in terms of the amount of electricity that's being consumed. Last time I looked, I think it was between around the size of the Netherlands, for instance, in terms of equivalence. We give a large range of comparative information, as well as caveats in terms of the model itself that we use. We're having a lot of interest, therefore, from institutional asset managers and custodians that are increasing their exposure to crypto assets with their clients, but need to understand what the ESG consequences are in that respect. So we're in the process of launching, hopefully by the end of the year, an extension to the model to be able to give an indication of the percentage of renewable energy that's being used. This is a big change because of the Chinese crackdown on Bitcoin mining and the migration of most of that mining, a lot of that mining, to the US and Kazakhstan in particular. Again, you can see that on the mining map that we have. And that obviously has changed the profile depending on the extent of renewable energy in those countries. So we're hoping to be able to get that model out soon, which will, I think, give increased transparency in terms of how big an issue from an environmental point of view Bitcoin mining is. And then we're also looking to extend that to other energy consuming proof of work, basically crypto asset networks as well.
Great. Johan, is property another example?
Yeah. Yeah, just so you know, we have seen right now the tokenization of real property in what we call institutional NFT, non-fungible tokens, because properties are typically unique. They're not very fungible, given that there's some unique features. So we are seeing the concepts of tokenized properties. The other area of property is in the area of intellectual property. So if some of you have been going to OpenSea, there is a US patent right now. There's auction for about in excess of $7.5 million that gives you the right of ownership to a US patent. So I'm saying we are increasingly seeing the tokenization of real life value and across a spectrum of assets. You have your traditional financial assets, for example, bonds, equities, loans, structured products, funds, and obviously now also different forms of alternative forms of money, commercial bank money, stable coins, and then more recent interest is on central bank digital currency as well. So back to your question of tokenization of property titles, as I mentioned, patents, you're talking about also now the digital avatar, right? So I know this topic is not about that, but there's a lot of focus right now. How do we create a digital value that doesn't exist in the real world, but more in the metaverse world? So if you look at the likes of Facebook, NVIDIA, Microsoft, Google, everybody is looking at how do I create something that is of value, but doesn't exist right now in the real world, but does carry a financial sort of value that hopefully could be tokenized and could be owned. So that itself would increase the velocity of digital assets or digital money, where currently you're not limited by the kinds of real life assets that exist in this world. You're limited by your imagination. Obviously, you are also restricted by regulations. But I think this is an exciting space because, where innovation lies, you could potentially create something of value that people want to keep, people want to trade, people want to custodize. And I think we're into a very exciting world where you got to have innovation, but at the same time, you got to make sure that it's done in a proper way, in the right framework.
Great examples. Alberto, would you like to add a few as well?
I would just like to add and make a point with what Keith mentioned about the role of big players, right? And it was a very interesting comment, and it's a reality. We have these big players in the ecosystem that, right, wrong, or indifferent, they have the potential to affect the system and manipulate some of the rules of the system. As Graham said, those as individuals, they are still subject to the laws of the jurisdictions where they are. Whether that will be enforced at some point in time, it's yet to be seen. We don't have a backtrack of like big cases where those have been brought to light. But at the same time, this situation with the big players and whales is a byproduct of the way especially Bitcoin has been created and has been bootstrapped, and how people have been incentivized in the beginning. The only difference is that at the beginning, because of the complexity of the technology, not many people decided to invest time and their own money and efforts and electricity bills to be players. So that's why we're left with this. But as we see newer projects coming on, my observation and data has been pointing that we have less and less of this players, and it's starting to even out a little bit as time goes and adoption grows in scale as well.
These are very fantastic points, because this is also going to be a global market. So it's nice to talk about regulators sitting in their own small spots, but like Graham said, people can surround that in very easy ways. It's already been a real pleasure to have you all here, and I think that while there's still time left, I'd like to sort of let you end on your own note about where you'd like to see this go. What would you like to be? What's your vision of the future of institutional blockchain for the next few years? Before we end, so who'd like to start this?
Okay, let me start then. I mean, from an academic point of view, we get schooled in not speculating and focusing on facts and trying to, do everything from an empirical point of view. So I do need to be mindful of that. However, I think to a large extent, obviously, as an asset class, what we are seeing in the crypto world at the moment is probably going to be here to stay. I think we are going to see increasing regulatory clarity, as we talked about before, and the multiple examples of that. And that will make a difference, I think, because institutions will increasingly come in and the retail institutions behind them, the retail consumers behind them. Endowments are already happening, pension funds may be happening as the environment matures. So I think that will make a big difference. And the other point I think has already been mentioned about the metaverse. I think that's going to be fascinating as we see the huge amount of investment that's being made in that area, and the way that digital assets and tokenized assets will have a new future, and what that will actually mean in that environment. How will they be transacted? How will they be held? And what value they will have in a virtual world as opposed to the physical world we live in today.
Yeah, I guess I'll go next. So in terms of kind of how I see this shaping out and where institutions have a role to play, I got very into Bitcoin back in 2015, and back then we were saying, that how exciting it will be once Bitcoin is $1 trillion. And now the broader crypto asset space is $2 trillion. Then it's going to become 3, then 5, then 10, then 100. And we don't even know kind of how big this thing is going to get. But I'm in the camp where I think Bitcoin becomes the global reserve asset of the world. And obviously institutions will be playing in that space. They already are. Fidelity probably being the first one in terms of custodying Bitcoin. Then we also have the crypto natives like Zappo, BitGo, Gemini, all these firms that want to hold Bitcoin for other folks because they don't want to deal with this thing called a private key, which can be very hard to deal with for especially people who don't really have the time to learn. And so institutions are already playing in the space, and as more trillions of dollars come in, obviously they'll be more and more excited about offering services. I think Citi just announced they're hiring 1,000 people. to deal with digital assets. And so they're kind of realizing, oh, okay, we actually kind of dropped the ball on this one over the last year or two. I'm not getting into the space early enough. So let's get back on track. And so that's on sort of the kind of crypto side of things. And then also on the kind of regulated asset security side of things, we're finally starting to see, as I mentioned, those first cracks in the dam where major institutions are doing things beyond proofs of concept, which is really exciting to see. And so one thing we kind of thought about early on at Polymath was, okay, let's make this tokenization protocol so that the farmer in Mongolia can tokenize his cows. But then you realize the cost might be prohibitive to them. That's only maybe $100 or $200 of assets going on chain. And so what needs to happen is for banks to get on board for this technology to become really meaningful and for there to be those 10, $100 trillion of assets on chain. And so that's what we're seeing now is these banks getting on board and having the infrastructure for them available that makes it easy for them to do so. And so that they can easily follow regulations has been our focus. And we see that really coming to fruition finally in 2021. And then it's only going one way in terms of the number of assets that are on blockchains. The genie's out of the bottle is what a lot of people like to say for this technology. And we're really only going one way. And that's more and more assets on chain, whether that's Bitcoin, Ethereum, other layer 1 chains, other layer 2s, or regulated assets, which we focus on at Polymath. So it's been really exciting and really looking forward to the future.
Great. John,
we have just my final word here. I think in the terms of financial system, what we're going to see is an emergence of a new financial market infrastructure where, obviously there's no one size fit all model. You do have your decentralized model, you do have your centralized model, and also you do have your legacy infrastructure. And how do we integrate, interoperate? I think these are sort of challenges that the market needs to develop. There is already an acknowledgement that there are some challenges before we reach sort of the utopian state. But I think where we will see in future is the adoption of distributed database, distributed ledger, tokenization as a way of creating a digital representation of value, as I mentioned. And also more importantly as well is how do you onboard some of these counterparties, the self-sovereign identity, the digital identity, that combination of it will create new market infrastructure and then would enable goods and services to be done almost seamlessly, hopefully frictionless, based on and a much better client experience than we are right now. And also the entire supply chain as well is going to change. It's already changing, but it will change in a scale that we will never imagine, right? So I think, to leave the audience with this is that we are in a space that if you put on a seat belt, we're going to move quite rapidly. Where that's headed, nobody knows the final destination. But what's important, we are in an exciting period where the combination of all these technologies plus all this innovation is going to drive a lot of disruption, obviously, in the traditional market, but also new business model, right? The digital custody did not exist before. There's a new business model, digital trading, NFT that we know it today could move and morph to a different universe. And we also spend a lot of time on metaverse. And if you look at it, a lot of the big tech right now are focusing on that is because they see that as the direction of the future state for e-commerce, e-experience, e-gaming, e-life, and a combination of others that you create your own digital virtual avatar in a completely different world where you have a real world and a virtual world coexisting side by side.
It's amazing to think of. Alberto, I let you have the word before I end the panel.
I think we are at the verge of seeing what's been described in life after Google, and it's happening before our very eyes. And it's a force that is unstoppable. Web3 technologies adoption is coming up at a much faster pace than we can imagine. The number of projects that I see, they're moving traditional data storage and data movement into IPFS based with storage of those pointers in blockchain. It's growing exponentially, and other opportunities are showing up as well. The amount of different players, the amount of different platforms, the amount of different ledgers out there there is a need for a better bridging of those. And so you can transfer your assets between platforms the same way you can transfer files today between cloud service providers. And that is something that institutions are starting to realize, because large companies and institutions are always looking for ways to drive better value. And one of these methods for them is to reduce cost. And there's nothing better to reduce cost than sharing the cost across a group of individuals that have similar goals. And this is what blockchain enables them to do. Being in DeFi, or being in digitalization of assets, or being in tokenization of assets, that allows for things that we were unable to achieve before. And this is a new and exciting future that's happening as we speak, and it's happening at a much faster speed that our minds can comprehend. So I got to focus on certain areas. That's an interesting message to close this, to focus on an area that it's that's closer to you, that has to do with your business, that has to do with your day-to-day operations, and go deep in that area to help develop that area, versus trying to understand the whole outlook of blockchain around you, and trying to leverage a little bit of everything.
Thank you, Alberto. Thank you all for sharing all the knowledge that you have, and all the knowledge that we do not have yet. These are definitely exciting times, as they have been for a very long time in finance. For all the years that I've worked in finance, it's been an exciting world to be in, and it certainly still is. So thank you such a lot for taking part in this. It's been a great pleasure to have you.
Thank you.
Thank you. Thank you all.
Thank you.